Hello dear students, myself Vaishali Gholab. Today we are going to see the introduction to accountancy. During this session we are going to cover following points, that is business transactions, bookkeeping, accountancy and difference between bookkeeping and accounting. These points we are going to cover in this session. First of all, what is mean by transaction? See, transaction is an act of exchange of things or services between two parties. And business transactions, see, transactions may be monetary, non-monetary or ordinary transactions. All transactions are included in transactions. Transactions, an act of exchange of things or services between two parties. Then business transactions. Business transactions, any transactions, dealings or events of the business which are in the past at least of a financial characters are business transactions. Now, what are the different types of business transactions occur in any business? First and most important transactions occur in business is purchase or sale of goods for a cash or on credit. Then purchase of property, furniture, machineries for the use of business and not for resale, either in cash or on credit, and their sale when they are of no use to the business. Then borrowing or lending of money. To run the business, we require the funds or investment. For that purpose, company or businessman has to approach the financial institutions who provide the loan or finance for the business. That's why borrowing and lending of the money. Then last and most important business transaction is incurring routine expenses like salary, rent, electricity charges, postage, advertisement and earning incomes like commission, interest, rent from a subtenant are the different types of business transactions. Now we are going to see what is mean by bookkeeping. See, bookkeeping is the art of recording the business transactions in a books of account in a systematic manner. What is mean by books of account? Books of account are nothing but the ledger and journal, which we are going to see in coming videos. And the persons who is responsible for and who maintain and keeps a record of the business transactions is known as bookkeeper. And this work is clerical in nature. What are the objectives of bookkeeping? See, it is not possible to anyone to remember all the transactions. That's why bookkeeping serves as a permanent record of the business dealings and it can be produced as evidence whenever required. Second objective of bookkeeping is a trader can know what he owes to others and what others owe to him. Means he can easily know who are the debtors and who are the creditors and the value of the various classes of property in his business. Then it enables the traders to ascertain his trading result. For what is the main aim of the running the business? To generate the profit. That's why trading results are nothing but whether we generate the profit or loss. That is, it enables traders to ascertain his trading result, either profit or loss. Then last objective of bookkeeping is to meet the requirement of certain laws. Now, what are the utilities of the bookkeeping or keeping the business transactions record? See, in absence of bookkeeping, nobody can carry out the business successfully, because if we have the proper record of the expenses and losses, we can do our business successfully. Second utility is bookkeeping enables the executives of the business to control the activity of the business. For correct assessment of income tax, sale tax, custom duties, the bookkeeping of the accounts are required to maintain and produce as and when evidence in the respect to departments of the government. Then the businesses are required very often to take a loan from the banks or other financial institutions in order to ascertain the creditworthiness of the applicant. The lender require going through accounts of the applicant. After having studied the accounts carefully, the lender take a decision in respect of granting the loan and cash credit. That's why to ascertain the creditworthiness is most important utility of the business or bookkeeping. If a If a legal action is required to take against any customers for recovery of debt due from him, the books of account are required to be produced in the court as a evidence. And then for ascertaining the value of business, in case of admission of partner or amalgamation or sales of book business, the books of accounts are required to be investigated. Then maintenance of books of account has been made compulsory in respect of the company by the Companies Act to safeguard the interest of the parties who have financial stakes in the business. Then in support of the insurance claim lodged with the insurance company, relevant accounts are required to be submitted to the insurance company. Then even the government is required to publish the accounts of the last year at the time of placing the budget before the House for discussion and approval. Then what is meant by account, accounting and accountancy? Account is nothing but the summary of business transactions. Okay, account is maintained in two parts, debt and debit and credit. Okay, account is a summary of business transactions. It is divided into two parts, debit and credit. The benefit received are recorded on the left hand side and benefit given are recorded on right hand side. That is nothing but the account. Account is a summary of business transactions. Then accounting. Accounting is the art of recording, classifying and summarizing the business transactions. Then accountancy means the art of keeping books of account in a regular and systematic manner. An accounting cycle refers to the complete process of accounting procedures follow in recording, classifying and summarizing the business transaction. This recording, classifying and summarizing we are going to see in detail in coming videos. Now, these are the steps involved in accounting. First and most important step of accounting is recording. We record all the transactions in subsidiary books for the purpose of future record or reference. It is refers to as a journal. Journal is a prime entry book. Why? Because we record the transactions as and when occurs first time in a journal. Classifying means all recorded transactions in a subsidiary books are classified and posted to the main books of account. It is known as ledger. Ledger is known as final entry book. Summarizing all recorded transactions in main books will be summarized for the preparation of trial balance, and from that trial balance we prepare the trading account, profit and loss account and balance sheet. Interpreting refers to the explanation of the meaning and significance of the result of the final accounts and balance sheet so that the parties concerned with the business can determine the future earnings, ability to pay interest, liquidity and profitability of a sound dividend policy. These are the steps involved in accounting. Now we are going to see the last point, that is difference between bookkeeping and accounting. See, bookkeeping scope is related to only recording and maintenance of books of account. Books of accounts are ledger and journal. Then accounting is not only recording and maintenance of the books of account but also include analysis, interpreting and communicating the information to the concerned parties. Okay, there are external and internal user of the accounting information that we are going to see in next videos. Stages. Bookkeeping is a primary stage because here we record the transactions first time. And accounting is the secondary stage. Here we try to analyze and interpret the record. That's why this is the secondary stage. What is the main objective of bookkeeping is to maintain systematic record of the business transactions, and accounting to ascertain the net result of the business operation, that is profit or loss. Nature, it is often routine and clerical in nature. Accounting, analytical and executive in nature. Responsibility, a bookkeeper is responsible for the bookkeeping activity. Accountant is responsible for the work of bookkeeper. Knowledge level, bookkeeper is not required to have a higher level of knowledge than that of an accountant. But accountant is required to have a higher level of knowledge than that of bookkeeper. Supervision, the bookkeeper does not supervise and check the work of accountant. An accountant supervise and check the work of the bookkeeper. Staff involved, work is done by the junior staff of the organization and senior staff perform the accounting work. This is the difference between bookkeeping and accounting. Thank you.